Hey, what's up everybody? It's Jangle here. Today I'm going to be showing you one of my favorite yield farms, especially in the current market conditions, and that is GMX. Now, GMX is a leveraged trading platform. You can leverage long different assets as well as leverage short different assets as well as spot swap assets, and it's not only on the Avalanche blockchain but also on the Arbitrum layer 2 Ethereum scaling solution. Now, the basket of assets that you have access to is actually different on Arbitrum and Avalanche. They're pretty similar, but on Arbitrum it also includes Link and Uniswap, whereas Avalanche, it is just what you see here: Bitcoin, ETH, stablecoins, and AVAX. So that's going to make a little bit of a difference when we talk about liquidity providing on this platform. But before we dig into that or talk about tokenomics or the mechanics of this yield farm, I want to take a step back and look at the security and why I believe it is a fairly safe farm to deploy capital. And first, we're going to look at the TVL over the last couple months here on DeFi Llama. And you can see that now it's over $250 million in total value locked in GMX. And this really started a significant run up around early January here. I believe it was January 9th. Around that time, this platform launched on Avalanche. So previously it was just on Arbitrum, and you can see that has spurred a lot of growth in the platform. I expect the trend to continue, maybe not quite at this rate, but I do see a good product market fit for this application, and I don't see a lot of good competition for this application. So I think that it has room to run quite a bit as we see the Avalanche and Arbitrum ecosystems, two ecosystems I really expect to explode over the next 6 to 12 months, especially. I think that we're going to see GMX really solve this this desire, this need in the market of leverage long and leverage short trading. So over here as well, they do have a bug bounty program with ImmuneFi that just gives me a lot of confidence knowing that if there is a vulnerability that would be discovered, it would probably be claimed by a white hat hacker. And also they have an audit with ABDK that looks like if there were any issues that were brought up, they were resolved. So I do have a good deal of confidence that this is a pretty secure platform. Again, there's always going to be counterparty risk and smart contract risk, but due to these factors, I think that's fairly low. And I've at least done some due diligence here that this is a safe place to park some capital. Now, right now, they're actually doing an upgrade. So the leverage long and short trading is temporarily disabled for the next few hours. It's been down for a few hours, and it should be up soon. They're posting updates and everything on their Discord, so I'm not too worried about it. But essentially here you'd be able to set a trade that you want to make. Let's say you wanted to short AVAX or something like that. It would tell you your entry price, your liquidation price, and you would pay fees. Now, the fee breakdowns are totally in the docs, and we're not going to get too deep into the weeds because it's all outlined pretty well in the docs. But we're going to keep this at a fairly high level overview. Now, how can you actually farm on this platform? I personally am not interested in leverage trading. It's just really not the game that I'm playing. I'm more interested in accumulating assets that I believe in over time, as well as growing my stablecoin bags and then getting a high yield on those assets in my stablecoins. So I'm more interested in the supply side of things. So in order to facilitate these traders coming on the platform and leverage longing or leverage shorting different assets, not only are they gonna pay fees and a lot of times get liquidated and get wrecked like the average leverage trader does, but they're going to need liquidity on the other side of that trade to ensure that they're able to do it, or else they wouldn't be able to use leverage to long or short. So that's where GLP comes in. And GLP is basically a basket of goods. You can see over here, it is AVAX. This is on the Avalanche blockchain specifically, similar on Arbitrum, but a little bit different. But it is, the target is 15% AVAX, 20% ETH, 15% Bitcoin, and then about 50% stablecoins right now, MIM, USDC, and USDCE on Avalanche. So you'll notice that, this says right here 15%, but it is currently at 19.11. ETH says it's 20%, but it's currently at 16.81. So what's the deal? This is not the same as a liquidity pool where it automatically balances with the swaps. This is more like a basket of all these different assets, and they have these target weights that they're aiming for, and it usually stays pretty close to these target weights, and they have incentive structures to actually keep it close to its target weight. And you can see that here where MIM is the only thing that's like drastically or under its target weight. So there's actually no fees to mint GLP using MIM. And something like AVAX that is overrepresented currently in the basket of goods is there are fees to actually mint GLP using AVAX, and then I believe it's like vice versa if you're burning GLP. So if you're cashing out in AVAX right now would actually get you a better deal than cashing out into, let's say, USDC. So that's how they manage to keep the not peg, but keep the weights of the all of the assets appropriate and on their target. So it's not always going to be exactly right, but it's usually going to be pretty close. Now, if we go over to the Earn tab over here, one thing that I really like about this farm is that if you have GLP, you don't actually have to stake it or anything. You can just buy the GLP and hold it in your wallet, and you're going to get paid right now about a 52% yield on, again, all those assets that we mentioned earlier, which are stable coins and some fairly strong assets that I believe will perform well over the next foreseeable future. But you can see about half the yield is actually paid in AVAX, and the other half is paid in escrow GMX. On Arbitrum, it's a similar breakdown, about half and half of the yield, but it's paid in ETH, the half that's paid in ETH and then half paid in GMX. So you're not just getting the farm token, you're getting also paid out in the blockchain's gas coin. So I think that's really cool. And not only that, but there are some good tokenomics behind GMX and escrow GMX that I'll go on to talk about here in a second. But real quick, I want to double back and talk about these weightings. Since they can go off target and it's not necessarily the same as a liquidity pool in an AMM, there's really no impermanent loss here. Like, yeah, if you're in this farm for a while and let's say AVAX moons super hard, but it stays at a 15% weight, yeah, you're going to lose out. But, short-term volatility, you can see, AVAX is up a good bit today while some other stuff is down. So, that's why it's kind of overrepresented here. I assume that's the biggest reason why it's overrepresented here. So, it's just very interesting that impermanent loss doesn't work exactly the same way. It's not the same. There's really no impermanent loss technically in this type of farm. So, very interesting. I also really like how they have this analytics page here on stats.gmx.io, where you can see the total fees paid, the amount of volume on the exchange, and this is specifically on Avalanche, where you can see that traders are getting tore apart here by fees, and you can also scroll down and see the profit and loss on a day-by-day basis. And so, it's been, the markets recently have been a little erratic. The bearish kind of on the 3-month, and then the last couple weeks we've had a little bit of a recovery. So traders are just getting jerked around here. I do see how if we have a sustained bear market or a sustained bull market, it maybe impact the traders' performance and then therefore your fees. But you can see the open positions here, how in the past when it was like max fear or whatever, there was more of a more short positions open, and then now we're having a little bit more hopefulness and a little bit more, not greed, but hope of a recovery in the market. So we've got a few more long positions open here. So it's just very interesting how you can see there's good user growth and there's good organic fee revenue in here. And as well, I took a look on Token Terminal for GMX and just looking at the protocol revenue since September over through October, November, December, and especially on these really volatile days in January, where we had the market kind of turned south on us very quickly, and then even those days in early to mid-February where the market just performed very well, kind of unexpectedly, or just the volatility of the crypto market is going to create the opportunity for this type of yield farm to do even better, because the traders they're getting jerked around, and the leverage traders are losing whenever there is a change in directionality of the market. So that's nice to see, especially in these unexpected breaks to the downside are kind of the most profitable days for the platform, which is nice. I want to talk a little bit about tokenomics here. And the escrowed GMX and then GMX staking. So right now on the platform, 70% of fees generated go to, and all revenue of the platform go to the GLP stakers or the GLP holders. You don't need to stake it, and GLP is that basket of goods. So you buy GLP and you get exposure to those assets, and you're getting the 70% of the platform's fees paid out to you in AVAX and then also in escrowed GMX. Now, that escrowed GMX can be linearly vested over a year, or you can go over here and stake it just like you would regular GMX and earn an additional yield against some of that paid in AVAX, or the native token of the blockchain, and escrowed GMX. I really like this compound button here because it just allows you in a pretty gas efficient way, not that it really matters on AVAX, to claim your GMX rewards and your escrowed GMX rewards, and then claim the AVAX and do it all kind of in one transaction, and then stake that GMX reward. So again, 30% of the protocol fees go towards the GLP holders, or 30% go towards the GMX stakers rather, and 70%, the majority of the platform fees, go towards the GLP holders, which makes sense. The GLP holders are, they're risking their assets and the opportunity cost of providing capital here to enable the platform to work, so they get the bulk of the fees, and then the GMX holders and stakers collect the other 30%, paid out both in escrowed GMX as well as the AVAX on the Avalanche blockchain. So it's a pretty good system. And there's one other thing, these multiplier points, which I think I have here in the docs, and you can pause and read this if you like, but basically staked GMX earns you multiplier points over time at a fixed rate of 100% APR. So 1,000 GMX staked for 1 year would earn you 1,000 multiplier points. These multiplier points increase the amount of yield that you can get on your staked GMX, and they're actually destroyed, they're burned whenever you unstake some GMX. So I really like how this incentivizes you not only to, buy GLP and earn GMX to get trading fees, again, on this platform that I believe is probably going to perform well over time, especially considering it's on two great blockchains, Arbitrum, which I believe will get a lot of adoption and an awesome leading Ethereum L2, and then Avalanche, which I think is subnets ahead of it, and a lot of new retail users onboarding, cheap and fast. I think both of these ecosystems are going to do very well. And then I think that this product and this application is something that a lot of folks are going to want to use, even though I personally will only be providing liquidity and will generally not be leverage trading. But the incentive here is to provide GLP to get this GMX and then to never unstake it, because you just want to keep stacking these multiplier points. Now, it is important to note that as far as I'm aware, from what I can tell, those multiplier points only apply to GMX. So they're not going to boost your GLP yields, unfortunately, but they will boost your GMX. And it kind of aligns the incentives of these of the GMX stakers to just hold on to that, to not sell. You're getting paid a good yield. And, in my opinion, not financial advice, chances are as these blockchains grow, as this platform grows and generates more fees, that it will most likely appreciate in price given the correct market conditions. And now if we continue to bear, then obviously it's going to suffer, but I'm optimistic about Avalanche and Arbitrum, and this platform seems like it is something that will have some demand. And I just want to go back over here and looking at the protocol revenue and the market cap divided by the revenue. It's all the way down here at 6.88, which is fairly low for a lot of for a protocol that has this potential for growth. So I think it's very interesting. I'm very interested in providing GLP here and dollar cost averaging into GLP, and I'll probably as I claim my rewards, I'll probably just compound them, my escrow GMX, back into this staked position and just continue to build those multiplier points and see if I can just ride the growth of these blockchains and these platforms. So I just like how as well there's such a it's a volatility muted position holding this GLP. It's fairly high yield, above 50%, and I get exposure to ETH, BTC, and AVAX, which I love, as well as 50% stable coins, which is going to help mute the volatility in my portfolio. So I do want to go over the risks, however, of this type of position, like holding GLP and supplying for a leverage trading platform versus traditional liquidity providing in an AMM. And the risk is really that going back to this stats page, the risk is that the traders do very well. And I anticipate that if we go up only mode for a month or two or three, or we just consistent bear market, if we have consistent market trend that's not broken for a prolonged period of time, and as you can see, usually the masses kind of leverage along the market trend. So in the bear market, folks are shorting leveraged, and as we get more hopeful, more people are taking leverage long positions. The high yields will come to the GLP position and to this platform when the market is volatile. So the risk is that we go up only mode for a while or something like that, and the traders start winning and cutting into these yields significantly. But the chances of the traders being net profitable, especially when you're considering the fees that are required to borrow and to open these positions and actually close these positions. You can read up kind of in the docs under trading down here. It breaks into it goes deep into the fees structure and everything like that, but the chances of them being net profitable are essentially zero. I look at it similar to owning a casino. The likelihood of it being anything but a money printer is fairly low. So I also, going into strategies and how I am farming this platform, again, is just personally me buying GLP, dollar cost averaging into GLP. Right now, after this consistent bear market, I've been deploying some stable coins. I'm a little bit lighter on stable coins than I would like to be, but I always love DCAing into Bitcoin and Ether, and then as well as Avalanche, which I'm very bullish on for the upcoming medium term. So dollar cost averaging into GLP, upping my stablecoin allocations, still getting exposure, getting all this upside and this yield, to me seems like a really strong option. So that's what I'm doing. I enjoy the muted volatility that this will bring my portfolio. So that's how I'm doing it. There's also an opportunity here to use this as a hedge potentially. Like right now, I know I've found myself in the situation in the past where I'm perhaps over allocated. The market conditions, while they look hopeful-ish in the very short term, we're still in a 2 or 3 month downtrend. And you will see if we can get above the bull market support band and continue the super cycle. But if not, if you have more exposure to ETH or AVAX than you're comfortable with, I think that you can go into a money market like Aave or like Banker Joe and maybe put up your AVAX as collateral, borrow some AVAX against it, and then mint some GLP with that AVAX or something like that, to where you can have a hedge on your portfolio, something that is going to capture a little bit of the upside of that volatile asset while also giving you some stability in your portfolio and a high yield. So obviously not financial advice, but using this as a tool to get high yield and maybe hedge your portfolio is also not a bad idea if you find yourself having overbought this dip. So that's not a bad idea either. Like I said, I'll just be DCAing into GLP, compounding my rewards back into this GMX stake position, and then maybe trying to accumulate AVAX with it as well. So thanks for watching. Let me know if you have any questions, and happy farming.